Welcome to the Wildverse podcast, where we introduce you to the wild world of taxidermy, a place where artists and hunters collide. I'm Heather.
And I'm Ashley.
And in today's episode, we're going to be interviewing somebody that's new to this scene and really breaking some fresh ground in something that is really hard for us taxidermists and small business owners. We really struggle with, and that is planning our future.
Yeah, it's easy to forget about putting money aside for our futures because there's always something that we feel is more urgent to spend our hard-earned money on. And let's face it, as much as we love our jobs, we would all like to actually retire one day. So to help us with that, let's welcome Mr. Evan Streeter with Taxidermist Advisors. How's it going, Evan?
Oh, great, guys. I appreciate y'all having me on. I'm looking forward to it.
Yeah, absolutely. So I know that we're going to get into like a whole bunch of financial stuff that is not going to make a lot of sense to us till we really dig into it. But first of all, one of the things that I noticed about you when I looked you up on social media is that you have a pig business.
Oh, yeah. Yep. So started hog farming when I was a teenager, about 18. I started that operation and, fell in love with it. And it's a nice break from the day-to-day, obviously being in the investment business and in the insurance business. That's a lot of computer time in the office. So it's nice at the end of the day to go out there and, spend some time in the woods with the pigs. So
yeah, I don't blame you. So because of that, we're going to kind of start this episode off on a fun note, and I'm going to give you like a pig-based trivia question.
All right, let's go. Let's see if I got an answer for it.
I think you will. There's a lot of weird stuff that I could have picked, but I picked one that I'm pretty sure that you know. I'd be kind of surprised if you didn't. So, here it goes. How long is a sow's gestation?
3 months, 3 weeks, and 3 days.
Yep. I figured you know that one. And I didn't think many other people would because it's like such an odd thing that it's 3 months, 3 weeks, and 3 days.
Well, luckily it makes it easy to remember.
It does.
I just do everything based off 4 months. We'll just say 4 months and okay, we're good.
That's true. That's close enough.
I remember that from 4-H. That was one of the biggest takeaways.
Yeah. So as I was researching all these pig trivia questions, I found out some really cool stuff about pigs too that I wasn't going to ask you because they're so like odd. But the one thing I found was that there were some scientists in China that actually put jellyfish DNA into pig DNA. And they came up with a litter of piglets that their noses and their hooves glow like bright green under a black light or UV light.
That's I've not heard of that. No.
Is that real?
It is.
I
thought it was fake, and then I Googled it, and it's real. Like, they glow.
Yeah, our farm is not that technically savvy.
No.
Yep.
Ours don't glow. Glowing pigs.
Yeah, that was crazy.
That is kind of crazy.
Oh, okay. So I guess we can get off of the pig topic, and Ashley, you can lead us into this.
Yeah. So for starters, we would like to know a little bit about you and what led you into becoming a financial advisor, and especially what gave you the idea to target an audience such as taxidermists. So if you want to give us like a little bit of background, sure. And then, kind of let us know like what about you.
Absolutely. So I don't like to be considered a financial advisor personally. So I have a degree in electrical engineering, and the perspective I have on investments is I'm an investor myself. Okay, so I'm very analytical and quantitative, and I look at the numbers of things, and it just so happens that skill is easily utilized in the investment industry. Okay, so the numbers and things like that, and as a financial advisor, when I think of that personally, I think of estate planning and wills and maybe life insurance, things like that. Although I do a lot with those, because you have to. That's not my primary focus as to what I do every day. That my primary focus is on a day-to-day is how can I make the most amount of money possible for the people I do business with, and that's it. So I consider myself more of an investor rather than a financial advisor. But so my story starts when I was 18. I enlisted in the Coast Guard, and I did it between my junior and senior year of high school. I went to boot camp as my summer vacation. Horrible summer vacation, would not recommend.
Yeah.
Came back, had a week left before I started my senior year of high school, and during that week I'd been working on a farm, and he was an older gentleman, and we were driving down the road one day in a truck, and in boot camp you go through a financial course, and they talked about a Roth IRA in that course, and we were driving down the truck one day, and I asked him, have you heard about these Roth IRA things? Like, I could be a millionaire if I start one of these things up. Like, this is phenomenal. And he said, well, let me bring you in and set you down at the computer. We'll talk about some of this stuff. Long story short, he's multi-millionaire, owned a huge brokerage firm and very large insurance agency himself. And so that's where my journey started. He taught me how to trade the markets. I got good at it and started, managing my own money, obviously, and then, my family's money, and then word kind of got, hey, this kid's doing some cool stuff. And then I joined an insurance company, American National. I got recruited by them and started doing insurance, although I did focus more on the retirement planning aspects of those. And then what happened at that company was I had never done insurance before, but every insurance company has what's called a market clarity list, which is basically companies that they want to target. And one of the primary companies that American National wanted to target was Taxidermist. And so I was like, well, I know some. I'm a very avid outdoorsman. I know some taxidermists. I'm gonna call them and see, what this potential avenue looks like. This would be great. And so I called a couple of them locally here and went out and sat down with them and said, what are you guys doing for insurance? Can I get you a quote? Like, it was very informal, very primitive, just literally wanted to see what it looked like, and worked up a quote for them. Obviously tax, the big thing with them is spoilage. You got a freezer full of stuff, what are you going to do if power goes out, whatever. I put all that in there, and then it was good enough. It was very good coverage, and it was cheap enough that they said, well, let's write it up. Let's do it. I'm like, you serious? You want to do this right now? So that's how it kind of started. And then since then, we've obviously started our own investment firm, and then we started Taxidermist Advisors, which focuses solely on taxidermists. And we do business insurance for just taxidermists, and we represent in the insurance world a lot of different carriers, although we have one in particular that we've structured a policy designed for taxidermists. And then the retirement aspects of it is primarily what we do, though, every single day, working with clients all over the country.
All right, I'll be honest, I totally forgot about the the insurance side of it. So we'll have to remember to throw some of that in there too.
Oh, the insurance side of it is not fun. It's not exciting. Nobody likes talking about it. I mean, it's like, you're just throwing money, at this thing, and everybody thinks it's horrible until the day comes that they have to use it. Then they're like, this was the best thing I ever got.
Yeah.
The retirement stuff is what people love, as far as making money. I mean, there's nobody that doesn't like to do that, and we do it every single day and make a lot.
Well, it's confusing, so that's why
it's
nice to hear from somebody like you. Because, I'll be honest, when I spoke with you at the Pennsylvania show, I left the conversation a little more confused than when I started. Because, you were naming out stuff that I was like, yeah, I know what that is, and I did not have a clue what that was. So we kind of want to make this a financial planning type of episode, for dummies.
Sure.
So I guess we should start off with, what do you do when a client comes to you to, get them on the right track?
Sure. So when they come to me, we always talk about debt. I'm a Ramsey certified financial coach as well. And so, we want to make sure we clear up. If you have a lot of consumer debt, say credit card debt, that's at 22% interest, it really doesn't make sense to take money and invest it if you're paying 22% in interest, because the probability that I can get you a 22% annualized return is over a 22% annual is relatively low, guaranteed every year. You know what I mean? So
Yeah.
that's kind of the first thing that we say, and that's just a mathematical thing. And then right after that is what can you afford to put aside? Because it's not how much you're able to invest on a monthly basis or yearly basis, however we decide to do it. It's how much time it's in there for. So what can you budget for to put aside for retirement on an annualized basis? And then a lot of times, what I found with taxidermists specifically is they have old 401ks or an old IRA retirement account from when they worked at Walmart, when they were 17, a couple $100 in there, something like that. So we find all these accounts, and then we're able to combine those into a single account, and that's kind of the start of their retirement journey. But those are the two big things. We need to get high interest debt eliminated, and then we need to figure out what fits into your budget for you to put aside every month for retirement.
Right. That's just like financial, like 101 is like pay off your debts and then start investing.
Sure. Yeah.
Right. Isn't that?
Yep. Now, obviously
like
not, your mortgage or, if you have a car payment or something, we need to get some money into the investments, because the most important thing within retirement planning or investments in general is time. Like I said, so mathematically, the compound interest equation, T is the exponent. So it carries the most weight mathematically, not the contribution. The time is by far more important than how much you put in.
So you're really gearing this towards like, possibly like people our age, like, who have the time to let this thing grow until retirement. Yep. So you handle like retirement stuff, like you're saying IRAs. If you have a previous 401k, you handle that, insurance, and then just do you offer anything else as far as like other kind of financial planning? Like
we do that. People call me all the time with questions on that kind of stuff, but that's not something that we monetize. Like we don't, you're not going to call me and say, hey, can we sit down for a financial planning meeting? I'm going to be like, okay, sounds good. It's going to cost $60 an hour. That it's more of, give me a call. I'll be happy to talk to you about whatever it is. Like I truly love it. I have a passion for it. I didn't get into the business because I wanted to make money. I got into the business because I loved it, and it just so happened I was good at it. And so I started making money doing it. That was kind of the development of the whole business. So absolutely, I do that, taxes and all kinds of different things.
Okay. And so I guess, for somebody like, me or Heather, sure, right? Like what would you recommend as far as like a retirement account for somebody like one of us? We're taxidermists, and well, Heather, you might have something else because you work for somebody. But
I don't know,
so I don't know what
if
your
I do or not. If I don't, I probably should.
Yeah. And so Heather works for a taxidermy company, a bigger studio, and I just work for myself. So like, what would you say is probably a good like step to take as far as some kind of retirement? Like, would you recommend a Roth IRA or some other kind of IRA?
So as small business owners, we just want to keep it simple. We don't want to get into complex strategies or anything like that. So probably one of the most frustrating things I see on a daily basis with clients is fees. The amount of fees that they pay to a financial advisor. Edward Jones, Merrill Lynch, JP Morgan Private Wealth Management. There's countless of them out there that are financial advisors that manage money for individuals, their retirement planning. The average annual management fee just to manage money in North America is about 1% a year. Give or take a little bit, it's about 1% a year. And Tony Robbins, I don't know if you know who he is. He does a lot of motivational stuff, life coaching, that kind of stuff. He actually, this whole book, Money Master the Game, right? I would recommend everybody read that book. And in his book, he talks about that the actual net fees that individuals pay inside of their retirement accounts is actually over 3% a year, which is astronomical as to what it does to your account value over a given period of time. And So 1% is the average, right? You can just Google that, average annual management fee for my retirement account. Google will come up with thousands of results of 1%-ish, somewhere in that range. Keep in mind the net, though, that you're actually going to pay after. There's 17 different fees that you pay within these accounts, unfortunately. And you got to practically have a PhD to understand them all. But they come out to about 3% per Tony Robbins' book. And so that's the average annual management fee. 92 to 98% of all of those people, financial advisors in North America, underperform the S&P 500 index. They underperform it, okay? They provide you a lower return, okay? Do you know how much it costs to invest in the S&P 500 index on your own?
I don't even know what the S&P 500 index is.
We'll get into that. It'll take
The Fortune 500 or something. I don't know.
It costs $0 to invest in the S&P 500 index. It's free, virtually free. It basically costs nothing. Okay, it's almost free to invest in the S&P 500 index. Okay, and you're going to get better performance than all the other financial advisors. Okay, so you're paying all these financial advisors lots of money. Okay, because 1%, 2%, 3% of your annual account value every year, right? You're paying them lots of money, and virtually none of them are going to outperform the S&P 500 index that you could invest in for free.
Okay.
And so what is the S&P 500 index is a collection of 500 companies, primarily in North America. That index is rebalanced I think it's annually, so I think it's rebalanced every year. It's said to be a representation of American business. So you're constantly going to be invested in, some of the best companies in North America. So you're not going to outperform the market. People say we outperform the stock market. That's typically what they're referring to. You're not going to outperform it. You're not going to underperform it. You're going to perform at its base. But guess what? You're going to outperform virtually everybody else in North America who has their money managed by these institutions that can't outperform the S&P 500 index.
So what you say is you can put your money, like you put whatever money you want into that S&P 500 index,
yeah,
and then it just whatever depending on how all the businesses in America are doing, your money makes money off of that.
Yep.
Okay.
Essentially. So let's walk through that process. What does that look like? So you go to charlesschwab.com. Charles Schwab is an online broker. So you have to go through it. Back in the old days, right, where you had to call your buddy James, who's a stockbroker, and he would buy the stock for you. And then now you own the stock. Well, nowadays we got technology, so we have online brokers. Charles Schwab's one of those. So you go to charlesschwab.com, okay? And on charlesschwab.com, and I used to use TD Ameritrade. They just recently acquired TD Ameritrade. So charlesschwab.com, there's a little blue button. It'll say open an account. You click that little blue button. You open the account. And then it'll say, what kind of account do you want to open? It says traditional IRA, Roth IRA, 401k, this, that, and the other. There's all kinds of different accounts. Most likely, the best option for most individuals is just going to be do a simple Roth IRA, right? Roth IRA, you put the money in there. You don't get a tax deduction for your contributions to it, but it's going to sit there and it's going to grow 100% tax-free. And then all the money that you take out of there, whenever you're 59 and a half or 60 and you're ready to retire, all that's going to be 100% tax-free. So the Roth IRA, it's all tax-free. You don't got to pay the government anything. And the government's come out and said that taxes are going to significantly increase, by the time, you guys are retirement age. Taxes are going to be absolutely astronomical, probably. Especially with all the crazy, spending that the Treasury is doing. It's absurd. So it's going to be good to take all that money out tax-free. So go on Charles Schwab, open an account, you click Roth IRA. And then it's going to take you to the next page where you put in your name, social security number, date of birth, email, phone number, all that kind of stuff, right? You just clicking next, filling out the account. And then you're going to get to a screen where it says, make a contribution.
This episode of Wildverse is sponsored by Pro One Performance Chemicals. Pro One specializes in tanning chemicals for the professional taxidermist. They provide a complete line of tanning products that provide you with everything you need to tan the next hide in your own shop. We trust the Pro One process and tanning solutions on all of our customers' mounts, Ashley especially has had great luck using the Pro Max on all of her competition pieces. She loves how easy it is and how well explained all of the directions are directly on the bottle. It's truly a very versatile tan. Not only does Pro One have the best tanning chemicals out there, they also have the best glue. Here in the shop where I work, we use Pro One glue on all of our customers' mounts. From using it in habitat scenes to gluing the leather onto the back of our pedestals and our wall pedestals, you can use it for practically anything. I mean, heck, I even thickened it and used it in the wings that were on my flying squirrel I competed with a few years ago, and they are holding up great. We love how thick the consistency is and how easy it is to maneuver under the skin once the hide is on the form. Ashley and I both use Pro One, and it is truly the industry standard when it comes to glue. Now, as of 2024, you can order your Pro One products online at pro1performancechemicals.com. That's performancechemicals.com.
The initial setup phase there, this takes 5 minutes, by the way. It's not like this takes hours to do. It's literally 5 minutes. It's as simple as making your account for the software we're using right now. I mean, literally, that's how simple it is.
Okay.
And so now you're staring at a Charles Schwab screen with your account open, and it shows $0 as the account balance, right? Because you didn't put any money in it. You hit the skip button or whatever button is there. Now you obviously have to fund the account to be able to make any investments. So you link your bank is the easiest way to do it. You link your bank account to the Charles Schwab platform. And there's literally a button on there that says link bank account. So just click that button, walk it through, and then you fund it with however much dollars you can budget for, that month or year, whatever, we've kind of talked about. So now you have it funded. Okay. So now it comes time that you can invest in stocks, bonds, mutual funds, ETFs, all kinds of different stuff you can invest in through a broker. Charles Schwab's the one we're using. But the single best investment that any individual can make is the S&P 500 index, like I said. Because the average individual is not going to know enough to pick the right stock that's going to go up over the next 5 or 10 years. The average individual, I do this every single day, and I read annual report after annual report after annual report, look at balance sheets all day long. I got desk full of just papers everywhere of balance sheets and annual statements and all that kind of stuff. The best thing an average individual can do is take their investment. They go up there and it will say, make an investment or buy a mutual fund or whatever. You can search it. You can search. There's a little search bar on the Charles Schwab website, and you type in VOO. That's the ticker symbol for the S&P 500 Index Mutual Fund. And say it's trading at $50 a share, and you put $100 in your account. Buy 2 shares of it. And then you can automate it to where you contribute $300 to it a month or whatever you want to do. And then so that's automated. So every month that money comes in, say on the 15th. And then you can actually automate that trade as well. So the trade is the execution of the buying of the investment, right? It's the actual purchasing of the security. So you can automate that trade so that the money's wired from your bank account at Bank of America on the 15th. You can say on the 20th, I want to buy as much shares of the S&P 500 index as I can on the 20th. Money's wired on and then you can set that up. And then you don't touch it for 40 years. And I can virtually guarantee you, if you're less than 40 years old, if you contribute $300 a month into that and you put it in the S&P 500, you are virtually guaranteed to be a millionaire. It's almost like there'd be zombies walking on the streets before you're not. Seriously, it'd be crazy. And that's just.
Unless there was like a stock market crash or something, like some kind of, maybe the crash, but like not a crash, like an apocalyptic event. Like that's what might stop you there. But otherwise, like it's gonna ride the waves,
sure,
and get you.
And for most people, that's going to be the best thing to do. Obviously, now we have a minimum investment amount with us of $10,000. So if you don't have $10,000 right off the bat to invest, then we can't manage your money for you to be able to earn the kind of returns that we have, because we've actually outperformed the S&P 500 index, though we still don't charge any fees. But the strategy we execute is called indexing, to where you're actually guaranteed not to lose any money. So that's the kind of benefit of doing business with us, is we just eliminate the risk of losing money, which is very important in retirement planning, as you can imagine, because you're kind of dependent upon that money to be there. So we eliminate the risk of losing money, and we average a very good rate of return. We've averaged over 15% over the past 20 years. So that's very, very good for a guarantee of no loss. But like I said, you got to get to that $10,000 amount first, and the single best way to do that is going to be invest in the S&P 500 index.
So you as in taxidermist advisors, like that's the minimum amount that you guys accept?
Yes.
In order to start investing?
Yes.
Okay. So if somebody came to you and they're like, hey, I have 10 grand, here you go, make something happen with this, then you guys take it from there. And then you're the acting person, like Charles Schwab, like you're that broker. Okay.
You're exactly correct. You're exactly correct. But the strategies that we implement, you can't have access to without going through us, right? Obviously.
Yeah. Right.
Now, but like I said, we don't charge any fees. There's no management fees.
So then how do you make your money? Because it's your job.
So I personally, me as Evan Streeter, not Taxidermist Advisors, I as Evan Streeter make my money off of a commission paid by the company that I'm doing the business with, that I'm giving the money to. Okay.
Gotcha.
But you as the individual, because the revenue model behind it from the larger scale, not me, is very complex, to say the least.
Okay.
But it's not, we manage your money and take 1% of the assets a year.
Okay.
If that, I know that might not make sense, but
it's like I have people that talk to you about financial stuff, and then you just never hear like it just doesn't make sense to me that I'm not paying you.
Yeah.
And that's what I try to understand, how this works.
I would be very hesitant to give any money to an institution that charges an annual management fee, because the probability that they're going to outperform the S&P 500 index that we said you could invest in for free is 6%. That's generous.
But basically, like, the more your clients get paid, the more you get paid, right? Because it's a percentage of
in the traditional management model, right? So in the traditional money management model, I think it's Fisher Investments has the famous commercial. Our fees are structured so that we do better when our clients do better.
Okay.
Yeah.
Well, what they leave out is they're still doing good even when you're doing bad, because they take 1% of your account value every year. So even though the stock market might go down 50%, they still get their 1%. And yes, it's structured to where they do better when you do better, because if you make 100% return, so you go from $1,000 to $2,000, they get 1% of $2,000 rather than $1,000 now, right? So that's what they're portraying in that. But the reality is, if you have 1,000 and you lose 50%, they get 1% of 500. Now, it's not like they don't get paid, if that makes sense.
Yeah.
Yeah.
And
so, but y'all, what's the difference between what y'all do?
So we take the money, and so it's technically regulated as a fixed indexed annuity. It's an indexed annuity is the product that the money is managed in. Okay. And I hate using the word annuity. There's a lot of negativity surrounding it with, people's annuities are very high in fees and stuff and that is true for a lot of them. They're absurdly horrible products to put your money in. But the fact that, we manage it in one special type of annuity, right? There's thousands of them out there, thousands of them. And we deal with one company in particular primarily, and their performance has been exceptional, and their products have no fees, and they guarantee not to lose any money. And as a matter of fact, you actually get an 11% bonus on all your contributions. So say you had $100,000 in an account, old 401k, and you invested it with us, you'd actually start day one with $111,000. So, I mean, that's a fringe benefit, but that's technically what it's regulated as. So I make money based off the commission of moving the money from whatever institution it's at now to them. They pay me. And then they take the money and manage it on the back end with that strategy called indexing.
Okay.
I know that
Heather, you don't get it either, do you?
No, that's
I don't.
okay. I just didn't
I'm a
know
little bit lost.
if we are paying you, like, we give you the money, we pay you, but you guys, we give you the money, we make money, you make money, all is good.
Yep. Yeah. Because we could keep going down that rabbit hole, and I've done it I do it multiple times a day, unfortunately. But the reality is, you give us, say once you get the $10,000 account, you invest that money with us. When you log into your online account and look at your $10,000, that $10,000 is always going to be there. There's not going to be a day ever where you're going to log into your account online and look at it, and it's going to be less than the initial contribution that you made. It will only go up from there.
Regardless of if it's 10,000 or 100,000, the money that you're given you don't ever lose that money.
Exactly. You're guaranteed not to lose anything. It will only go up from there. Only go up from there.
Oh, that's nice.
So, that's not the norm. If you have a account on Charles Schwab, for example, and you invest in the S&P 500, which is what I recommend you do if you have less than $10,000, right? Because we can't mess with it. Every single day you go log in there, it's going to be up or down. There's no guarantees. Let's take 2008, for example. In 2008, the stock market got crushed. People lost over 50% of what they had saved for retirement. So let's say you were 50 years old. Say you're 58 years old. You're getting close to ready to retire now, and you say you have $1 million saved up. Within just a few months, like you lost 50%. You went to $500,000. You lost $500,000 within a few months. Like that's
a lot.
That's a risky business. That's a risky business to be in. To where, obviously, but there's so much marketing dollars. There's billions of marketing and sales dollars behind those sorts of investment strategies because that's where the money is. As a financial advisor, you're going to make significantly more money managing it with a 1% annualized management fee than what you would make implementing the strategies that we do for our clients for retirement planning.
Okay.
I mean, and I have all kinds of calculators on my computer. I mean, go to NerdWallet or type in, mutual fund fee calculator, for example. Type in mutual fund fee compound interest calculator, and pick one of them and fill it all out and look at the difference between what your account value is paying a 1% annual management fee versus 0%. There's no comparison. The amount, and it'll show you how much money went to the advisor. It's absurd.
Yeah, because 1% doesn't sound like a lot.
No, it doesn't. It doesn't sound like a lot at all. I can actually tell you right now exactly what it would be for, various numbers here if it will get pulled up. So say you started with an initial investment of $10,000 and then say you invested $500 a month, right? So that's $6,000 a year. Say you did that for 30 years, okay? And you averaged an annualized rate of return of, say, 12%, which, like I said, that they're likely not going to average a 12% return over a 30-year time frame.
Yeah, that seems high.
Yeah, the S&P 500 has, but they're likely not going to. And then say you paid that 1% annual management fee. and I wish you guys could see this, what I'm seeing on my computer right now, but your ending value, and this is what I'm saying about the time, your ending net value, starting with the $10,000, investing $500 a month, you're going to end up with about $1.5 million or $1.9 million, almost $2 million, right? Mm-hmm. The amount that you paid to that financial advisor is almost $400,000.
Oh, wow.
With a 1% annual management fee, almost $400,000. And like I said, the reality is close to 3%. The reality is actually you're going to pay close to 3% per Tony Robbins' book, right? That the cost of fees there that you're going to pay to that financial advisor is almost $900,000 over that 30-year time frame, almost $1 million. In that same scenario, my commission, you know what my commission would have been in that same scenario? Like $600.
Oh my gosh.
So, it's the difference between making $1 million and $600. It's a no-brainer for a financial advisor to implement the strategies that they do. But the reality is, it's not the best thing for their clients. Their clients would be far, far, far better off just having a Charles Schwab brokerage account and investing it in the S&P 500 index for free. You're going to come out well ahead. And this isn't my, great idea. I just took the idea from Warren Buffett and researched it. Warren Buffett, one of the greatest investors of all time, almost every single one of his annual meetings, he talks about the single best thing any average individual can do for retirement planning is to take their money and just put in every month, every couple of months, a few $100s, dollar cost average over the length of 30 or 40 years, and you're going to do incredibly well. The worst thing you can do is give it to somebody to manage, because the reality is they're going to not even come close to the S&P 500.
Jeez, I bet if any financial advisors listen to this, they feel like some real crud balls.
Oh, they should. Because I've seen people.
Dang it, Edward Jones.
Let me just put a perspective on this, okay? Let me put some perspective on this. I meet with clients every single day, and it's not just taxidermists that we deal with at our larger investment firm. I mean, we do this stuff all over the country, and every single day. I met with a client. Their total portfolio was about $500,000. Okay, about $500,000 is what we moved from the institution it was at. I'm not going to say the institution it was at, but it was one of the larger ones that a lot of people go to, right? So we moved $500,000 from it. Okay, that's what he had in his portfolio. He'd been there for almost 30 years. Okay, if he had 30 years ago, and we did all the math on all the contributions and distributions that he has taken. If 30 years ago he had just put that money in the S&P 500 index and not give it to this individual at one of these large institutions, guess what his account value should have been? Almost $3 million.
Oh my gosh.
If he just put in the S&P 500 index. Okay, so the reality is that this industry is taking millions of dollars away from people. That's a shame. That is a total shame. That's a complete scam, in my opinion. It really frustrates me because this guy, he's well into retirement age now. $500,000 is not what it used to be. It doesn't get you nearly as far as what it does. What it did 50 years ago. When he was our age, right? So it's he's out $2.5 million. And what was the
3 million, still 3
exactly.
million.
So
oh my gosh.
What is the single thing that is different there? The rate of return. The net rate of return on an annualized basis. That's the only thing that's the difference between $500,000 and $3 million. But because of the fees that he was paying, he was paying over 3% a year in fees. And then that advisor's performance, what he generated for him on an annualized basis was horrible. But that's the reality. That was actually one of the better cases I've seen, actually. I mean, in all actuality, he was actually doing really good. I've seen we moved like $3 million last year from one of these extremely well-known institutions, right? That there's one of these on every corner, right? We moved $3 million from in like December of last year, I think it was, and amongst several different accounts, or maybe it was $1 million. It was a pretty considerable amount amongst several different accounts that we moved all from the same institution. Okay, different individuals. They didn't know each other. It was just all part of the same company. The single best return over the past 15 years that one of those accounts had, the single best one was 7% a year. The S&P 500 over that same time frame did 17%. The average was about 3. Was about 3%.
Oh, that's awful.
That's the difference between hundreds and hundreds of thousands of dollars. We had a client. This was I guess 2 years ago. They were at one of these larger institutions, right? She had been invested with one of those guys, on every street corner, right? $20,000. It was about 40 years ago. She was pretty old, obviously. 40 years ago, gave him $20,000. The day we moved her account value was $46,000, and she never took out one dime.
Gosh.
She never took out one dime. She should have had hundreds and hundreds of thousands of dollars, but no, she had 40 grand.
Yeah.
But in the meantime, that advisor, what's he care? He's getting an annual, and this is unfortunately, I'm so glad that you guys are doing this. This is the kind of information that needs to be out there. If people want to call me and say, Evan, you're totally wrong about that, I would be so ecstatic, because it's sad to see what it's doing. When I meet with these retirees that are literally ready to retire, and now they have only Social Security to live on, when they've been investing a few $100s a month for 30, 40 years. They should have bukus of money, but they got a few $100,000. That's
sad.
Right. So they still have more than they put into it, but obviously they should have had a lot more if they were willing to put that money away.
Yep.
And so I guess another question I have is do you handle just people wanting to invest money and getting, just a regular kind of investment, or only retirement stuff? If somebody wanted to invest for only 5-10 years, would you handle that kind of case, or would you only want to take on retirement cases?
So just managing money as an investment, there's a lot of regulations and stuff around that.
Okay. We've
gone the hedge fund route in the past, but the reality is that doesn't qualify. For somebody to give us money under the hedge fund limited partnership status, you got to be an accredited investor and so forth. And most people do not, that we deal with on a daily basis, don't meet that criteria.
Okay, so you guys just handle pretty much the retirement stuff.
Primarily, all we do is retirement. And then I'll talk about investment stuff all day long with people, but it's not something that I do for a fee or anything. We don't, because the reality is, most of the time when you're looking to do that, we're probably not going to outperform the S&P 500 index. And you could,
it's still
the best thing that you can likely do is just invest in the S&P 500 index for free. More than likely, that's going to be the best thing that you can do. So I could, obviously within my own personal account, we still implement the same we're value investors, what we do for our family and stuff, our family office, if you will, right? It's a small family office, but I guess you could consider it that. We do value investing, which is where we buy undervalued companies and we stick with them and then sell them. And that's kind of the investment strategy we implement. But we don't do that for individuals. We encourage individuals, if you just want to invest, do the S&P 500 index.
Okay. I guess maybe kind of switching the subject a little bit. What made you folks want to start, I guess, catering to taxidermists specifically? What drew you to the taxidermists, in the taxidermy world?
Sure. So obviously very avid outdoorsman. Love hunting and fishing. When I was recruited by American National, we had the option to do not only retirement planning, but to do insurance as well, right? They're an insurance company, and but you can still hold other licenses, securities license and stuff with them, whatever, and do retirement investments with them. But they said, they want us to do insurance, especially commercial insurance. And like I said, I saw that on that Market Clarity List, Taxidermist, and that's how I kind of got into it. I started doing the insurance for them. And then I realized that very few taxidermists were planning for retirement.
Okay.
They weren't setting aside money for retirement. It just, they just weren't doing it, right? So then I had the idea. I was like, well, hey, why don't I create a company that all we deal with is taxidermists? All we talk to is taxidermists, because I like taxidermists as people. Like I said, a big avid outdoorsman. I like talking to them. They're nice people. Most of them aren't dirtbags. They're not horrible individuals. So, I like them. I like working with taxidermists. They during hunting season, I ain't got to worry about them calling me when I'm
no.
So it's like, this is great.
Facts.
I've never got one call from a taxidermist while I was in the duck blind. I've gotten plenty of calls from other clients, but you don't got to worry about that with taxidermists.
No.
So
we hate when people call us. So
that's kind of the path into it, and then it just started to roll forward from there.
Okay, and so I guess did taxidermists seem like kind of an untapped market?
Oh, for sure.
For
sure.
I could picture that.
That was the other thing. When you're looking at it from a business perspective, who's going to be your target audience, and how are you going to contact them, and what's that going to look like? Who is I going to, who am I going to work with? Taxidermists seemed like an easy target audience to go after, simply because, I don't know of how many calls have you guys gotten from insurance agents wanting to sell you property and casualty insurance for your business?
Never.
Exactly.
Goose egg.
It doesn't happen. Now, if you talk to the local real estate office or the local dentist office, they're like, every month we get one, so it was just, there wasn't a lot of people focusing on not a lot of, I don't know of any that was really focusing on serving taxidermists. And so when we were able to create a policy for them, on the insurance side, that's kind of our segue, into developing a relationship with the taxidermist we work with. And then we're like, hey, this is super important. We need to do this retirement planning. Let's talk about that. Because if you prospect and you call a taxidermist, hey, where do you have your investments at? Click.
Yeah.
We don't want that. That's a very sensitive subject. So
scam call.
Yeah, exactly.
So I guess a good question. I know what I was paying for business insurance when I had my own shop, and it wasn't a whole lot. Now, whether they had all the bases covered, I don't know. I thought it was pretty cheap. So what is an average, a one-man shop taxidermy business?
Sure.
What are they looking at per year?
Yeah, most people are blown away. I hear I go to the state shows. People walk by smart and oh, it's probably $500 a month. It's not even close to $500 a month. That's kind of a two-part answer there to your question. So one thing that I always see is people say, oh yeah, we have insurance. They have general liability, and then a little bit of the structure is covered. Maybe there's some contents on the shop. But taxidermist, you need spoilage coverage is probably one of the most important. Because say you have a freezer full of 60 deer hides, and you get $600 a deer head, and that freezer goes out for whatever reason, and you lose all those hides. You're out $60,000 in income, right? That's a claim that you can file with the insurance company, and you will get a $60,000 check, assuming it checks out and you didn't unplug the freezer and just tell me it went. Right?
I want to quit taxidermy.
So that's the reality.
Okay, ideas.
So we need to make sure that's covered. I rarely see a policy that's actually covered. People think it is, but no, it's not.
Yeah.
And then the other thing is limited care custom control coverage. So that is, say you have a showroom, you got a bunch of deer heads in there, fish, all that kind of stuff, finished mounts, right? If your shop burns to the ground, that we need to make sure that stuff's covered, right? And because it's not your stuff, it's your client's stuff that's in your care, custody, and control. So a lot of policies read in such a way that they won't pay out for that. So you got to make sure that's covered, right? And then products and completed operations liability coverage is also something that's frequently missed in other policies that we always add in is say you mount a deer head and the client takes it home, hangs it on his wall. He just takes a drywall screw, taps it into the drywall, not to a stud or anything, and hour later, little Johnny bumps the wall, and the deer head falls on him and hits him, and he wants to sue you because you mounted the deer head wrong. You didn't put it in correctly. For whatever reason, people come up with this is a too happy word, right?
The fears is starting to build.
that needs to be covered, and unfortunately, a lot of policies don't cover that. It's products and complete operations liability coverage. And so, obviously, we make sure all that's included, and then all your basic, the structure coverage, all your, tools and equipment, freezers, all that stuff's kind of covered. Say you wanted
like theft.
All the standard stuff. Of course, that's that. But those three things are just what I typically see not covered in a standard taxidermy, business insurance policy that I look at. Which those things are like mega important. Probably like you're looking at less than $100 a month for, say, small shop, $70,000 in coverage, $1 million, $2 million liability. So $700 a year, or so, something like that.
That's not hatefully, I think, and like I said, mine probably wasn't covering that stuff. It was probably just my tools, my shop.
General liability
and
stuff.
I think that was $580 a year.
Yeah.
So it's not even that much. It's not that much cheaper. I would rather have all that coverage for even $1,000 a year.
Oh yeah,
that's not bad.
No, yeah. I mean, I don't think it's. And honestly, if people don't want to do it, I don't. If I go to a show, I have a little book, right? I write down their phone numbers. They want a quote. I call them. I'll get them a quote. If they're like, yeah, we'll think about it. All right, let me know. I might follow up with you, in a week or two. But, if you don't want to do it, that's fine. I think you should do it. My thing's investments and retirement planning. That's the stuff I truly love, because that's about making money. I love that. When I make somebody, thousands of dollars, within a couple months, they're like, yeah, this is great. I'm like, yeah, it's pretty nice. To where the insurance is, you're paying, $50 a month, and you're like, well, this is horrible. I'm not getting anything out of this. Now, obviously, once something happens, and you're like, whoa, holy smokes, thank God I had that. But,
No, I mean, the power of insurance is strong. If you ever have to use it, how important it is and how lucky, fortunate you feel to have that. Just for example, I was renting a place 2 years ago, and I'd only lived there 2 months, had renter's insurance for $15 a month. And then I had a bunch of stuff stolen. And luckily, it kind of covered a bunch of stuff that I had stolen, deductibles and whatever, but I still got a payout of $500, right? So still I put in $15 for 2 months, $30, and I got $500 back for a bunch of stuff I had stolen. So it actually was worth it. Obviously, I'd rather have my stuff back, but I'll take $500.
I know, and
so,
I tell people just get a quote. Just look at getting a quote just to see what it costs, so that you can have a basis of decision. A lot of taxidermists we work with, Pennsylvania, we had several actually that were they had shops in their garage. Just small shops in their garage. Your homeowner's insurance doesn't cover the liability of that business, by the way. So your homeowner's insurance won't cover it. If somebody comes onto your property and trips and falls because they're picking up a deer head and want to sue you, your homeowner's insurance will deny the claim. It's not covered because they're there for business purposes. So we wrote several policies up there in Pennsylvania for, a garage type shop, covered all the contents, spoilage, general liability, all that stuff. It was less than $300 a year.
Wow.
That was really good.
It's very cheap. And I think anyway, I think for what you're getting, it's very cheap.
Yeah, the peace of mind that you get, I think is worth it.
And then I actually had another taxidermist. He used it as marketing. Because
Oh,
think about this. You got somebody that spent $60,000 to go shoot some animal in Africa. They want to make sure that while it's sitting at your shop, they're not going to lose $60,000 if it goes up in flames.
yeah.
So he used it as marketing, like, "Hey, we're licensed and insured."
Yeah, specifically insured, not just regular insured.
Yep, exactly.
Specifically insured. So I guess you mentioned how you said you have policies like in Pennsylvania. Do you have to create new policies for every state?
No, so we work with
No?
the Hartford primarily is who we do a lot of business insurance with. It's large insurance company. We deal with Nationwide and Liberty Mutual, but the Hartford right now is really good on premiums and prices and stuff. So they are actually the ones that with the policies, and they do those in all 50 states. Well, I think all 48 states. All of those companies do, and then Hartford I think does all 50 states. So
Okay.
But you guys are ensuring that it covers the stuff that taxidermists are specifically.
that's
Needing to
so
be
I
insured.
tailor the policy for that. That's where my
Oh, okay.
so they have the general policy, right? When I go online on our software, the AJET portal, that they have the general policy, and then you can add this or take this away and do this and that to make sure all the bases are covered. And we can do stuff to make sure the premiums are competitive and so that it's affordable for you. And so that's kind of where my specialties come in to play.
Okay.
Yeah, I think that's great. I think I feel like if anybody hears this and they don't reach out to you that doesn't have insurance or wants to invest, I don't know. I think it's a no-brainer at least to talk to you, because I know now I will leave the conversation today actually knowing something, feeling like I'm not completely confused.
Yeah, and like I said, it doesn't cost a thing for me to walk you through how to set up a Charles Schwab Roth IRA account, fund it, and put the money in the S&P 500 index on a monthly basis or yearly basis or whatever for you. There's no cost there. I actually don't make any money from that at all.
Yeah.
We don't have any. That's strictly a free service, I guess, that you could, utilize, and then it doesn't cost anything for you to call me and say, "Hey, what's it cost for me? I got a shop, I got 5 freezers, how much insurance do I need? This and that." It doesn't cost anything for me to send you over a quote,
So I know a question I had you saying about the S&P 500. You had mentioned that you can say, you have your bank account hooked up. It can take, say, $300 out of your bank account. And then you said, then you can pick a certain date that then you buy as many of that stock or share or whatever. So let's say you have, an extra $25 that can't, you're short, or how do I word this?
So that would
your $300 doesn't buy, you don't use up your complete $300. Does that happen? And it rolls over?
So yeah, it would just that if that was say you were using ETFs is what the way that would work out, because you can't just put all 3 mutual funds. If you use the mutual fund, which is what I would recommend, you can just put all 300 in there. It's not necessarily it costs as much a share, and
Okay.
okay. Now ETFs, obviously, if it's say $75 a share or something, and you had 300, then there would be some money there that would just sit in the account, and it would just not be invested in the S&P 500. It would just sit there.
Ashley's getting it now.
I got it. Okay.
Yeah, I couldn't figure out how to word it, but I was trying to think. I know it's not going to be the perfect number for the shares. So I was trying to figure
mutual funds, you can just put in $300 a month, and they're a fund, so it's not like there's a stock price that you essentially could, I guess, buy partial shares. I guess is mutual funds, you can buy partial shares rather than buying just 1 or 2 or 5 or whatever. So if you wanted to buy Apple stock,
it's $1,000, isn't it, per share?
I don't
Probably more than that.
But you got to have, if you got $1,000, it's not, you can't just put that all in the Apple stock, right? You could only put whatever that is divided by the share price.
Well, I'm confused again.
Oh no.
Oh no.
So, I mean, I know the simple part of it you were talking about with the S&P 500. Like, that makes sense. I get that. That seems pretty...
And that's what people need to,
simple.
that's honestly what people need to take away. That's the important.
Yeah.
You don't need to go trying to pick stocks and do this and that, because the likelihood you're going to outperform the S&P 500 index is basically zero.
Like, you could get lucky and, like, hit it big on a stock, right? But
Oh,
that's
sure.
probably, like, lottery odds, or maybe a little
No,
better
probably a
than
little better.
lottery odds.
When I started when I was 18, I remember we made like 300% in like 2 months. It was pretty ridiculous.
Wow.
It was pretty ridiculous. And I was like, man, this is easy. Like, there's nothing to
Kinda
this.
do it.
Yeah.
And it just so happened that was a really good time. And, we got a reality check pretty quick. But
Apple stock is at $192.32.
Okay, yeah, you're a little off.
I thought it was like, well, last time I checked, which was probably a long time ago, I thought it was like 1,000.
I remember
but
it was
maybe I'm off.
expensive. It was really expensive. But, yeah. Oh, a quick funny story for you, Evan, about investing. It was a few years ago. My husband had gotten a message from a friend of his that said, hey, like, it sounded legit. He was like, hey, I got hooked up with this guy with investing, and he really like did really well for me. I gave him your info because I figured you might be interested in it. Like, it did not sound sketchy. And so this guy then messages my husband on his Facebook, not the friend's Facebook, and was like, hey, this is so-and-so. Like, I was talking to your friend, whoever, and he said that you might be interested in investing. And he's like, how much would you want to invest? And Ryan was like, oh, I don't know. Like, I could spare like $1,000 right now or something. And he's like, well, how much is in your bank account? And Ryan's like, I don't know what that matters. And he's like, well, it only works if I use everything that's in your bank account. And we were like,
Oh,
this seems really fishy. I don't think this is legit.
we need every last cent.
It only works if you use everything in your bank account.
yeah, I'm not familiar with that strategy myself. So,
Yeah, that must be a new one. Okay, question for you. Maybe this is dumb. What do you think about Bitcoin? I just want your opinion.
I mean, it's I guess you could treat it as a currency. That's what it is. I mean,
Some people treat it as an investment,
no,
right?
I
I
would not
personally
consider-
don't, so
an
I'm
investment.
not biased.
I would not
but-
consider it an investment simply because an investment, you're looking for the asset to produce the return. So, for example, think of a rental property. When you purchase a rental property, that's an investment because the rental property itself is going to produce the return. Rather, somebody comes by tomorrow and buys it or not, it doesn't matter. The renters are still paying the rent and it's cash flowing, producing the return, right? So nobody has to have an interest in purchasing it in order for the return to be there, right? The renters are paying it and your cash flow.
Oh, it's because
Bitcoin,
Bitcoin's just value based.
exactly. It's a currency. We as humans give it value. So therefore, I don't believe it can be considered an investment because the only way that it goes up is if somebody the next day pays more for it than what you did today.
Yeah, I don't know anything about. I don't know how you can.
I don't know
mine
either.
it.
I just-
don't, but it
just
was a
made me
good
think.
question.
And then
like you know more about
we'll
it.
talk. We'll use what Warren Buffett says, right? Is it a good thing or a bad thing? Well, it helps criminals and human trafficking and everything like that function. So
Okay, I never heard that side of it.
I mean
That's
it's
interesting.
decentralized and
I gotcha. That makes sense.
I guess the reason I maybe thought of that was because I feel as though taxidermists might lean towards the Bitcoin type investing, but they
no,
shouldn't
they should not. Absolutely not.
because it's not technically investing. It's just
Yeah, I would not recommend
loose end
using
investing.
Bitcoin as your retirement planning strategy. That would
Oh man,
that
well,
would probably fall
no.
through. Although people make lots of money.
Invest in GameStop instead.
Yeah, I mean, I know some people had gotten a lot of money from it. Another good thing to ask you is, I don't guess you wouldn't consider it retirement planning, But like, what's your thoughts on CDs? Because I know CDs have good rates right
Oh,
now.
good
That's a
question.
very good question. Yeah, very good question. So I personally don't use CDs. We use something called a MYG, MIGA. Maybe you've heard it called. Um, an MYG is a multi-year guarantee annuity. It is an annuity, okay? But what it does is it pays a guaranteed rate of return over a given period of time, just like a CD. It's very similar to a
Okay.
CD. Very similar to a CD. The only difference is um, they have higher rates than what CDs have. So maybe the CD at your local bank's paying 5.5%. We have an MYG that pays 6. So
Okay.
typically the MYGs have a better rate of return than the CDs, and so we say that's the better place. If you're looking for that kind of an strategy where it's guaranteed over the next number of months or years to pay
Yeah.
X percent, typically the MYG is a better bet. It's that kind of investments very just this one pays 5, this one pays 6. Pick the one that does 6. I mean, it's very
Yeah.
simple. Relative to what we've been talking about is which one has the bigger number.
I know I had a risky idea as I was writing this script up, and it wouldn't work for me because I work for somebody now. But I wonder in a hypothetical situation where what Ashley.
I kind of feel I know where you're going with
Oh
this.
yeah, we'll find out. So, okay, so you get a whole bunch of work in October, November, December, and you're already like doing good. Like you have a good fund build up. I wonder if it's not a horrible idea to like take those deposits and put them in like a 3 month or a 6 month CD or MYG, and at least then you're making some money off of
So
your 20,000 and whatever.
I'll give you just a business tip, right? This is very across the whether you're a taxidermist or dog groomer or a real estate agent, it doesn't matter. Any sort of cash that you have, I use a high interest. It's technically a savings account,
Mm-hmm.
but it's really like a checking account. It's a completely liquid, no fees. You can take money out of it whenever you want to. You can write checks from the account. You can move it from that bank to this bank, back and forth electronically. I use a company called Wealthfront. They currently, right now, pay 5.5% on the
Okay.
money. It's completely liquid. So the reason I would caution you on using CDs is because, or even an MYG, is it's not liquid money. There's,
Yeah, it's like stuck there
yeah,
until you can take it
exactly. So
out.
like, what happens
Yeah.
if you need it, right?
Yeah.
Because you got to pay your insurance premium somehow. So
Yeah, yeah.
so typically, I would say use that Wealthfront account.
Okay.
I think they have the highest rate in the industry. I'm not affiliated with them at all. It's just they pay 5.5%. I actually keep all of my money there and only keep whatever little bit I need to live on every week or month, whether that's in my business account or my personal account. I keep just enough in my brick and mortar bank. So, Bank of America,
Mm-hmm.
Wells Fargo, just enough in there to live on. And then everything else I keep in that high interest bearing account.
Is there like a
Nope.
minimum for no, there
Not that
isn't?
I'm aware.
It's usually like
Maybe it's like 100 or $500 or something.
oh, not like a
No.
2,500. I used to have like a money market account and the minimum's like 2,500 bucks or else they'd give you
Yeah,
fees, so that
you
was
want to
kind
stay
of
away from
not
those.
very practical. Yeah.
This industry is just like loaded down with all kinds of fees. There's all kinds of people every day thinking about, okay, how can we make more money? And it's like, well, technically, if we charge them for wanting money today rather than waiting 3 days, we could make, X number of million more dollars a year, right? Because we have this
Yeah.
money client. So the financial industry is the worst with loaded, fees, or they eat you alive everywhere. So
Yeah.
stay away from them.
Okay. Well, that's good advice.
What was that savings account that you said you use? What's it called?
Wealthfront,
Wealthfront.
WEALTHFRONT.
Okay.
Heather, the question you were asking though was what I was
That is.
thinking because I had thought about that before. I'd never done it, but
Yeah.
it seems like a good way because like taxidermists, we get all these deposits like, you know, a lot of money in one time of the year, and of course using that frequently to like buy supplies and stuff. But there is some opportunity to let that money sit, and then
I mean,
how can you make
what is
that
your
money
checking
work
account
for you
paying?
better?
Your checking account's paying 0.01%. Maybe a really good one's
Mm-hmm.
paying 1% or something. Well, 5.5 is better than 1, so put it in this account.
Yeah.
I mean,
I agree.
that's about
Yeah.
the amount of logic that goes into it. This number's bigger than this one. As long as it doesn't have fees and it's completely liquid, to where you can access it at any time, that's a much better option.
Now, how are
Yeah,
you?
like
How are you accessing it? Are you able to write checks out of it? Do you have to digitally
Yep.
move it around?
I do everything personally. I do all mine digitally. Just you literally you log into the app. They got an app for it, or you can do it online. And it says transfer money. And you click that button. And it says which bank account you want to transfer it from, which one you want to transfer it to, and you say this one to that one. Send. Boop. Money's there in like a day.
Gotcha. That's nice.
But in the meantime, it's sitting there earning 5.5%. So
yeah, that's really high for a savings account, right? Like they're typically like 0.5% yield or something crazy, like not high at all.
That 5.5 is pretty good. And I mean, I tell all my clients. I actually just talked to one yesterday. I was like, hey, this is what you should do. I mean, because if you got money in your checking account that's earning 1% when it could be earning 5.5, why wouldn't you do that?
Yeah, I agree.
And it's just perhaps sitting there. Hopefully, you don't.
The reality is, people just don't know. People don't.
Exactly.
They don't know about the fees in their retirement planning. They don't know about this option. This, that, or the other thing. If you went to a financial advisor and said, "Oh, what should I do with that money?" all day he's going to say, "Oh, you need to put it in treasuries." Why do you need to put it in treasuries? Because they get 1% of all the money that's in the treasuries.
That makes sense,
you need
too.
to give it to us to manage in a brokerage account because you're going to earn way more than 5.5. No, you're not. But they'll say you are. That's just the reality of the industry we live in, or the world we live in, I guess.
Man, I feel like I can get rich now.
I know. I'm like,
I don't think
what
so.
can I do?
Oh, I mean,
everybody.
Everybody can retire a millionaire. Absolutely everybody. Like I said, it would be very difficult not to.
It's just a matter of like how to start, make it super simple for people, right? Baby steps.
Exactly.
And then, for people like me and Heather, like we're young too, and like yourself, like where can you start now? I mean, because sometimes it's hard to think about like when you're like around our age and it's like, oh, well, that's like later in life, but obviously
you don't want to wait.
You want to start now so that it builds while you're still working and able to work, right?
I mean, by the time you say you did $100 a month, starting a day, right? By the time you hit 65, the difference in a year is hundreds of thousands of dollars, not $1,200. It's hundreds of thousands because of the time component and just how it compounds. It's exponential. The chart is like little bit, bam, it's straight up. That's what the chart looks like over the years. Is after 1 year, you see a little bit of growth, 5 years, little bit, 10 years, little bit. And then it's like 20 years, it's like shot through the roof. I mean,
and that's because your money's just growing. So at that point, instead of being $1,000, it's $20,000.
Yes,
that's growing.
Exactly.
Yeah.
And then you're earning.
It's like the concept of, they say like, oh, would you rather have $1 million right now, or would you have a penny doubled every day for a month? You heard that one?
Yep.
Or it's like you have 2 cents, 4 cents, 8 cents, but then you have like $3 million.
I'll tell you a quote by Albert Einstein. He said, "Compound interest is the eighth wonder of the world, and those that know it earn it, and those that don't pay it."
Oh no, I'm paying it, I guess. Oh gosh.
So okay, all right. I know we're getting close to like the end of this episode as far as time goes. But what is compound interest versus interest? What's compound interest? I don't know.
So I've never been asked that question. Let me figure out how to explain it. So interest, right? You just, you say you buy a 1 year CD, right? That pays 5% a year, okay? And you do that off of say $1,000, right? $1,000 you invest in a CD at 5%. So after a year, you would have, I think, $1,050 in the account, right? So you'd have $1,050 in there. and then that's it, right? That's the interest you earn was $50. Now let's say you put it back in there, and you do it another 5%. Now you make 5% of $1,050.
Okay.
And then that just compounds forward. So that's compound interest.
Gotcha.
Just year after year, you're making X percentage
Interest on interest
on interest,
on interest.
money on money on money on money. You're just making more of it. It's just, breeds like pigs do. You end up with a lot of it, I think.
3 months, 3
days,
3
weeks, 3 days.
Yeah.
They do that. Pigs are compounding
That's
breeders.
right. Good business.
Whatever. They can make a new pig like every, I don't know, it's like feral cats do.
Yep.
Like cats are
Rabbits.
crazy.
Oh, another thing I learned about pigs is that take a guess at what the biggest litter was ever born. How
25.
many?
23.
37.
Oh my gosh.
That's a lot of pigs.
I've never had one close to that size.
Yeah. I think they said average is like 8, 7, 8, something like
I was
that.
going to say like 10.
Yeah, we learned about pigs, and we learned about finances, and we learned about piggy banks. Perfect.
There you go. That's a good idea.
Cool.
Yeah.
Is there, let's see, we're kind of wrapping up. Evan, is there anything like you want to share that maybe we didn't touch on, or like anything that you might, maybe you want to talk about? Just anything like that?
No, I don't think so. The biggest thing that I like to convey to people, investments and retirement planning, I think is the most important thing that I do talk about on a daily basis. And the primary thing is don't be taken advantage of. Understand the numbers, understand the fees that you're paying, and what the implications are of those years down the road. And don't pay a 1% annual management fee when it's not due, because ultimately you're paying them for performance. You're paying them to do a job and hopefully outperform the S&P 500 index that you could invest in for free. So that's
Wow.
it. That's the most important thing, in my opinion, that I can portray.
I guess I do have another question that came to mind. So like if somebody, for example, like is a taxidermist but they have employees, like full-time employees, and they wanted to set up some kind of retirement for their employees, is that something y'all would handle as well? Like, is that something you could
We
facilitate?
do 401k administrations for,
Oh, okay.
you got to kind of be at scale for it to mathematically make sense, because there is fees associated with the compliance and regulatory requirements we got to file with the IRS. Because to set up a 401k for your company, we do got to file some documents and do some certain things to administer that 401k. But we do that, and there are situations where it does make sense if you have a fairly large shop, and because you can generate a lot of tax benefits, tax write-offs for your business from that.
Okay. But like if somebody, they just have maybe 1 or 2 employees, or like if they're not a huge company, would you recommend them just maybe getting individual?
Yeah, typically
retirement
that's going to be the
plans?
best way to go,
Yeah.
is just individually do it, on their own. And now I come in and talk to each of them individually. So, they could say, hey, we work with this finance guy. He's going to help y'all with retirement. There's no fees or anything associated with that, but I would just recommend they just do it individually. I can still facilitate it for them, but we're not going to go the formal route of doing a 401k, filing all the regulatory documents and stuff with the IRS to make it an official, pension, if you will. We're just going to work with John and so.
Yeah, that makes sense.
Basis.
Yeah, because I'm thinking, most taxidermists probably just work for themselves, but then of course there is some people that work for other people, or people that employ other people. So obviously there's like different, examples
Oh, yeah.
of different experiences people have. But I imagine for the most part, people are just going to have kind of personal plans when it comes to retirement.
Yeah, I agree.
Yeah, that like, and then I'll just tell y'all and whoever's listening as well, if your spouse works at a normal job where they have a 401k, in that 401k you can make allocation changes, right? So you can go in there and choose different investments, right? the single best investment you can pick is the S&P 500, right? So, your spouse has a 401k. They might, you might not even know that you can change your investments or what their investments are right now. They probably don't. Most people don't anyway. And there's still those same fees associated within your 401k, by the way. I ask people all the time, how much of your fees are you paying in your 401k? They're like, oh, I don't pay fees. I say, I promise you pay about a 1% annualized management fee, because 401k is a tax code, right? So you put money in your 401k at work, that money's then invested in this fund or that fund, T. Rowe Price index fund here, Merrill Lynch, this, Wells, all kinds of different funds, right? Each of those funds charges a management fee. But within your 401k, dashboard on the web, on the internet or whatever, you can do the allocation changes. One of those allocations that you can pick is the S&P 500 index, and make everything zeros except for that one. Change that to 100%.
I wish I'd known that. I used to have a 401k, but I don't anymore.
That's the
Got rid of that.
If you guys have a spouse or something, or any of the listeners, have an old 401k or something, that's definitely the single best thing that you could put the money into.
All right. So, Evan, if people want to reach out to you to use your services or to just contact you about either insurance or retirements or any of the other services that you offer, how can they get a hold of you?
So you can, shoot me a text or give me a call on my cell phone. So I do all my business with my personal cell phone for Taxidermist Advisors. So 803-280-5437. Shoot me a text or give me a call, and I'd be happy to talk to anybody.
Awesome. And you guys have a website as well?
Yep. So we got a website. You can go on there and check it out. It kind of explains our investment strategy in a little bit more depth. It doesn't talk about the S&P 500 stuff, but we covered that plenty. But it does talk about the investment strategy in there. There's some PDFs, downloadable PDFs. You can look at some of the numbers and statistical data and stuff behind our method to the madness.
Awesome. Yep. If anybody is listening and they want to contact Evan, you can contact him there and through Taxidermist Advisors, right?
That's right.
Yep. Okay.
All right. Well, I guess that about wraps up our episode for today. And we really want to thank you, Evan, for chatting with us and helping us put some of this financial crap into layman's terms for some of us less business inclined folks.
Well, I appreciate y'all having me on. I enjoyed the conversation.
Yeah, us too.
Yeah, thank you. I definitely learned a lot too, and I'm going to be applying some of these things for sure. I might be giving you a call, Evan. So anyway, we would like to thank you for listening to our podcast, Wildverse. We hope you enjoyed learning about how to better plan for your future and maybe inspired you to get started on it today. If you would like to stay up to date on new episode releases, you can follow us on Facebook at Wildverse Taxidermy Podcast and Instagram at Wildverse Podcast.
And don't forget to subscribe to our YouTube channel, Wildverse Podcast, and watch along to see pictures and video of the things we're talking about. We would also love if you could leave us a review on Apple Podcasts or wherever you enjoy listening to our show.